So today we have a major update on crypto, something that could potentially change the future outlook. You know, a few days ago, US crypto bill by Senators Kirsten Gillibrand and Cynthia Lummis was actually leaked, and I started to film a video speculating on the leak. But a few hours later, they actually released a long-awaited bill that essentially lays out the framework for the US crypto industry. And given that the US is second only after India in crypto owners, this could actually be a big deal that sets an example for other countries to follow. And by the way, this would be the first ever regulatory framework and legislation for the US crypto market. Crazy. But before we get to it, shout out to the last video's best comment by Jonathan. I love this project, hope it will have a future. Now, obviously he was talking about the Steppen app. So if you haven't seen that video, make sure you check it out. And whether or not Steppen app and pretty much the rest of the crypto market has a future, well, that is largely dependent on the things that we'll be discussing today. The future regulation of the crypto market, which is basically kind of stuck at the moment, still waiting to break out either up or down. And make sure you show me some love and hit the like button. And if you haven't already subscribed, please do that for all the latest things in stocks, crypto, trading, and everything in between. We're going for 100K this year, and I cannot do that without your lovely support. So thanks for liking and subscribing. Let's get to it. Now, first of all, what exactly is a bill? Yes, it's also this, but in this context, a bill is a proposal for laws regarding a particular thing. In this case, crypto. Basically, it is a proposal that needs to be accepted by the lawmakers, and if it's accepted, we shake on it, and that's the new law. This crypto bill is a bipartisan proposal, meaning that both sides of the political spectrum are involved to make the crypto space a little bit better. So what are they proposing? Well, the bill is actually 69 pages long, so I'm going to give you the too long, didn't read version of the most important aspects. And that, in my opinion, is the question of who will be in charge to oversee the crypto market in the United States. And this bill advocates that cryptos should not be treated as securities, which are regulated, by the SEC, Securities and Exchange Commission, but more like commodities, which should be regulated by the CFTC, or Commodity Futures Trading Commission. Now, we have to remember here that the SEC has had kind of an unfriendly, even aggressive stance on the crypto market over these past years. I mean, they were the ones that sued XRP, and the case is still not over. They basically accused XRP of being an illegal security and not a cryptocurrency, and therefore the SEC should have been notified of their every move. These situations have happened in the past, and in most cases, when a company is targeted by the SEC, they usually give in and settle, but not XRP. XRP is fighting back and claims the SEC is biased against them and crypto as a whole. There's a big chance that XRP goes Johnny Depp on the SEC and wins the case, but time will tell. If that happens, the SEC will have to do some explaining to the crypto folk. Weirdly enough, the chair of SEC, Gary Gensler, is also a professor in MIT and teaches and researches blockchain technology and digital currencies. So he's ought to know a thing or two. Nevertheless, the SEC has time and time again said some unflattering comments about the crypto market, considering it an investment that you should largely avoid. As of now, Gensler argues that most digital assets in the roughly 1.2 trillion market qualify as securities, so similar to stocks, publicly traded companies. So this gives his agency the responsibility to police them and enforce their issuers. To quote Mr. Gensler, "The fact is, most crypto tokens involve a group of entrepreneurs raising money from the public in anticipation of profits. That's the hallmark investment contract or security." Gary Gensler, ladies and gentlemen. So what about CFTC? If this bill gets passed, and we'll get to that, then the big bad wolf, SEC, sort of gets sidelined. And the US government is basically coming to an agreement that most digital assets are much more similar to commodities than securities. And so the regulation would be handed over to CFTC, which already regulates futures trading. As you know, Commodities Futures Trading Commission. It already regulates futures trading for Bitcoin and Ethereum. But the new proposal would give the agency wider power by handling the oversight of the crypto spot market as well. So crypto brokers and crypto companies and crypto entrepreneurs would have to deal with the CFTC for the regulation, instead of the sort of anti-crypto vibes SEC. Overall, this does sound bullish, and I'll get into more of the bill in just a moment, because first we have to look at what is not so good about this proposal. Well, first off, lack of solid regulation has already damaged a lot of the sentiment in the crypto market. We've had rug pulls, we've had BitConnect, we've had Luna 1, Luna 2, many other instances. So it's clear that we must have a strong regulation. And the SEC, although not without their faults, is the strongest regulator of them all. I mean, they took down Jordan Belfort. So comparatively, the CFTC is far smaller than the SEC, with about a sixth of its budget, which is not so good. Tremendous resources are definitely needed for such a fast-moving market as crypto, where the next big thing is history next week. And Dennis Kelleher has a very interesting point. This is the co-founder of Better Markets, basically a financial reform advocacy group. And I'm gonna quote him a lot here. He says, "It's not surprising to see senators propose relatively light regulation for the crypto industry after investors and executives poured that much into campaigns." And he also says that handing crypto regulation to the CFTC is a deliberate attempt to shove responsibility onto an agency that Congress has left without resources for years. And also, he said the legislation in effect deregulates crypto because the CFTC isn't equipped to regulate the complex and fast-growing sector. To quote, "Actually, in my view, it is much worse because it's designed to make the public think it's regulating crypto. Wall Street and its allies in the Congress have made it sure that the CFTC have been chronically underfunded for years, making it impossible for CFTC to even fulfill its current responsibilities." So what I'm getting from him is that even though the proposal of labeling cryptos as commodities and digital commodities is okay, the push for regulation by CFTC is actually a really bad call. Well, maybe not the best example, but it's like asking a loan from a person who's hunted by loan sharks. Essentially, the CFTC doesn't have the money or the resources to do this job effectively. Thus, rampant scams will continue to slip by unnoticed. And I especially like this quote, which sort of explains it better. "Giving CFTC jurisdiction over crypto is like New York City outsourcing crime fighting to a small town police force." That's what he said. You might see a cop every now and then, but by and large, the criminals are going to be running the place. Pretty strong words from Mr. Kelleher, and not the best look. But fortunately, the bill has somewhat already addressed this, stating that this Responsible Financial Innovation Act would address the resource gap by allowing CFTC to assess a fee on the companies it oversees. Right now, CFTC can only regulate trading in commodity derivatives. In turn, just like companies pay fees to the SEC for supervision, so too the CFTC would receive new sources of income from crypto businesses. So clearly there is some strategy in place should this bill become the law. But if we just skip over the part where the CFTC does not have the resources to deal with the crypto market just yet, I believe this bill is actually bullish for crypto market as a whole. Because finally, once and for all blockchain companies would know what the rules are and how are they treated based on the purpose of their token. And there's a bunch of other things in the bill that I think are super positive for increasing adoption. Like, for example, crypto transactions up to $200 would be excluded from taxpayers' gross income if they're used for payments. So if you're buying pizza with $8 worth of Bitcoin, you would not be taxed on the purchase. Similarly, lending via smart contracts would not constitute taxable events. And also finally, which I actually called in my previous video, stricter regulation on the backing of stablecoins. As Connor would put it.
Because I predict these things.
So what this basically means is that stablecoin issuers like Tether would have to provide full disclosure of their reserves, including nearly 100% backing by real assets. So wait a second, are you telling me that US senators are seeking to create a law which requires stablecoin companies to fully disclose their reserves and be fully transparent and backed? What about Tether? Well, if you haven't seen my Tether video, this probably didn't make sense, so go ahead and watch it after this one. So how do we round this all together? So even though the CFTC is underfunded and the SEC is the cream of the crop when it comes to regulation, as it stands now, I think this bill, if passed, would do a lot of good for the crypto market as a whole. But keep in mind that these bills often take years to be passed and adopted as laws. So this really has no short-term impact on crypto prices, despite what YouTube gurus with charts may be telling you. The bill may also get reworked and adjusted and split into new bills, just like the Fed does with your dollar. But overall, we can't expect any significant conclusion to this earlier than 2023, which is also an important time frame for Bitcoin, which I outlined in one of my previous videos. So if you haven't seen it, what are you waiting for? There is a chronological crypto story going on in my channel for the past week, so make sure you watch them all and let me know down in the comments, who do you want to see in charge of the crypto market? The SEC or its 6 times smaller cousin, the Commodities Futures Trading Commission? I'll see you tomorrow. Peace.